Zero to million, everybody. We're on our way to $1 million starting from zero, guys. As you can see in the account right here, the value is 15,900. We're kissing 16,000. Market value is 14,000. We got about 1,900 in cash waiting to be deployed. Just kind of saving it. We got a couple things here to see. Max account, we started 7,000 January 8th, making some trades. Here we had a big jump from the 13th to the 14th. We're doing $850 every week, but this week I did the 850 plus. I threw in another 5,000 for that week, and then I did 850 last week. Of course, we know what happened with the market last week. It was down overall. We look over here for the positions. We'll go through the trades that I made the last 2 weeks because I didn't put out a video the week before. Here's everything in the account. Cost basis here. We got Google. On the 14th, we bought 3 shares for 179. Excuse me, not for 179. The market value was 538 for that. Then we bought 2 shares on the 21st. 359 market value for that. Cost basis 362 divided by 2, so like 181 bucks there for that one because it went down. Amazon. What did we do with Amazon? We bought on the 14th and we bought on the 21st. 5 shares on the 14th. We got 1 share on the 21st. Overall for the account down 5.63% since we started buying Amazon. Chipotle, about 1,200 in the account there for Chipotle. On the 14th, we bought 10 shares. We almost doubled down on our position there. We got 21 total shares. Dutch Bros, we didn't add anything over the last 2 weeks there. It's still up. They had a stellar earnings report and guidance. MasterCard is the stock that we added that was new from the last video. We bought 1 share, $569.17, down about 1.7% since we purchased MasterCard. Earnings report looked good. They're going to be gaining about 12% revenue projected for 2025, so that looks good. McDonald's, we didn't change our position of McDonald's, up 9.11% since we first got that position. Meta, we did buy some Meta on February the 14th. We got 2 shares, like $736 a share on average there, cost per share. We're down less than 1% since we first got into Meta. Hoping that one goes down a lot more. I think that's a buy all day, every day. Microsoft, we bought 1 share February 14th, 407 bucks a share, cheaper than what we had bought it for previously. So we're getting that dollar cost average down as the stocks are going down and dipping. We're just going to keep buying. Dollar cost average for the share is going to go down. That way, when it rebounds and goes back up, profit's going to go back up. We just need time and patience, and it'll be good. Microsoft, on the 14th, we got 1 share, 407 bucks, cheaper than what we bought last time and way cheaper than the time before. So we're getting that dollar cost averaging down. So we only lost 2.84% since we started building our position there. So that's good. Palo Alto Networks, we didn't add any shares there. Pulte Home, we did increase our space there. We got 5 shares for an average of $107.90 a share. You see we got 106 the last time on the 7th. When we first started building the position January 21st, 117. So we're getting that dollar cost average down, down almost 8% for Pulte Homes. But long term, we're looking at that for a good one. They're buying up real estate last year like crazy. This year, they're planning on buying tons of raw land for future developments, which is looking good. They've got a lot of inventory that they're going to be building on in the future. And as time goes on, the value of the property only goes up, of the land, and the cost of the houses only go up over time as well. So long term, that's going to be a good one for us. Walmart, we didn't change any positions in Walmart there. So you can see overall for this particular portfolio that we have public, we're down 2.02%, or about $367.81. We got cash. We got almost 1,900 in cash. Um, if the stock market, it went down last Friday, went down quite a bit. We're going to keep building this position of cash every week. We're going to keep 10% of our money. So we're putting in $850 into the account. 765, we're going to be buying stocks, whether it's up, down, sideways. I bought stocks on Friday when the stock market was going down, and we'll continue to do so. We're keeping 10% of that, so $76 a month, plus the 5,000 we put in. We saved 500 from that, from when we bought stocks 2 weeks ago as well. So we're going to keep building this every single week until it gets to a really nice number, or if we see a really, really big market correction. I don't consider Friday a big market correction. It's a nice little dip to buy at a lower price, but that's not the kind of market correction we're looking for. I want 10%, 20%, 30% reduction to deploy all that money. Otherwise, we'll just keep what we're doing and keep buying the dip for as long as the dip goes down, and just keep going from there. Total account value, about 16,000 or so. I think right now I'm going to be building on all these positions. We're only putting in 850 a week, so it's not like we can buy every single stock. We got to kind of pick and choose. Meta, I think, is a buy all day, every day. I would just keep building that position. I would love to see that go down, even if it went down $100. What would we buy it for the first time? Let's see here. $616 is what we bought it for the first time. Most recently, $736. It's $683 right now. If that keeps going down, I recommend to buy. It's only going to go up over time. Down the road, when it's over $1,000 a share, we're going to be looking back at like last Friday when the stock market went down, and we're going to be looking at that as, man, we wish we would have bought more shares. So as that goes down, trust in the future of Meta, trust in their earnings reports, trust in their guidance, and any new information that they have coming out. That's going to be a huge, huge stock in the future. They've got their business model down, and it's it's a well-oiled machine. So I like that one a lot. Chipotle, it's going to be tough for restaurants. Chipotle and McDonald's, it's going to be tough for restaurants in the first half of the year for the restaurant sector. So that's something to keep in mind, that a lot of these restaurant stocks might be going down for the first half of the year, which is fine. You can just get them at a discount, at a cheaper rate. And then just remember that towards the second half and later half of 2025 is when they're going to start turning around. It's what's projected. We'll have to keep an eye on that. And then that's where we're going to see our returns, is in the second half of the year. So we're long-term investors. We're not worried about it going down in the short term. It just presents us with a buying opportunity to get at a better price. Dutch Bros, they're going to quadruple the amount of stores they have. They have about 1,000. They're going to go to 4,000 nationwide. That's a long-term play. I know it's up. Our biggest one, it's up 26%. Cost per share was $60. It's now $76. It's gone down a little bit last week, as did all the other stocks. I really like to see that go back down into the 60s if we could. Present a really good buying opportunity to keep building that. But that's a long-term one. They're going to be adding 3,000 more stores to the 1,000 they already have over the next years to come. So that's one that we'd like it to stay low as long as it can, so we can build our position and then reap the benefits of it going up later on. So that's one where I would buy all the time, and I would especially buy during any large dips for that one. Same thing with Chipotle. McDonald's, similar, but I'd like to see a much bigger dip than what they've had since we started this channel. So I can hold off on that one. Microsoft is down quite a bit, so I like buying that one right now. There's also another stock where they're going to come out with the earnings report next week. It's Home Depot. Home Depot is likely going to miss their projections again. They've been missing them per store every quarter for, I think, 12 quarters. I'm not sure. But I'm not sure exactly. I think it's about 12 quarters. They're probably going to miss their projections, Home Depot. So I think that's going to go down. That'd be another buying opportunity. Home Depot also spits out a nice little dividend. So I think that's good. We'll see what the earnings report looks like. If it's bad, it might go down a little bit and really present an even better buying opportunity for Home Depot. But I think long-term it's going to be good. One of the problems with Home Depot that they said was the large ticket items. And Lowe's is having the problem as well as the large ticket items. So like Home Depot, for example, the appliances have been hit hard. They're concerned about the tariffs also. So that's one thing that's really been affected by their affected their bottom line is the large ticket items like the appliances. If people get more confidence in the economy, if we can get this tariff issue to kind of settle down or maybe go away, then we'll probably see the appliances pick up. If Doge spits out that $5,000 stimulus that they want to do, maybe people will go out and buy washer dryers, refrigerators, whatever. That would also turn up the bottom line for Home Depot. So those are things to pay attention to and keep in mind in the future. But I do like Home Depot for the future. Let's see here. Go back to our balances. And yep. For the day change, that was Friday. I was up $491, but keep in mind we put in $850, so technically for the day we were down. Just remember to buy whether the market's up, down, left, right, sideways, diagonal. When it goes down, don't panic. You run towards the panic. Let everybody else panic and sell their shares. Go in and buy them, knowing that you're in it for the long term and you want to make millions long term, and you're not looking, for the quick buck today or tomorrow, or trying to do the day trading, which is basically just gambling, because then you have an awesome opportunity to lose all your money. Just be in it for the long term. Be consistent. Be patient. And just trust knowing that over the long term, the stock market does go up and you will be successful. Thank you. You guys have a great rest of your Sunday.